Hello everyone. Good evening. How are you guys? All right, it's 7 p.m. and today we got another exciting webinar from M Plus Online. All right, hope you guys are ready. All right. So today we will collaborate with our partner. All right, Macquarie Warrants Malaysia. So before we get started, can we get some comments in the comment section? Just put down comment if you hear my voice. All right. Okay. Just leave a comment, say hi, or if you can hear my voice. All right. Any comment will do. Okay. All right. So we have an exciting webinar ahead. Hope you guys are ready. For today's webinar. All right. Have you guys left a comment? All right. Okay. Let me check. All right. Yes. Okay. All right. So for today's webinar, all right. For today's webinar, we will be exploring the world of warrants. All right. Will be conducted by one of our partners from Macquarie Warrants Malaysia. All right. So for those who have just joined in or have joined earlier, just leave down the comment on the comment section. All right. To let us know that you guys can hear us clearly. All right. Okay. All right. So before we introduce our presenter today, let me share with you on our exciting new campaign. All right, M Plus Online Top Fan campaign. All right. So how does you can participate in this campaign? All right. So these are the steps that to join our Top Fan campaign. So basically, step one, if you have a Top Fan badge, all right, just make sure you turn on your top fan badge. All right, if you don't have the top fan badge, don't worry, you can just share this webinar and earn a sharer badge. All right, so after that you can just leave a comment in the comment section, top fan. All right, just leave a comment, top fan, if you own a top fan badge. All right, if you don't own a top fan badge, don't worry, you can just leave any comments. All right, and then screenshot this webinar during live with your comment. All right, screenshot, and then lastly you need to fill out the top fan Google form that will be posted in the comment section. All right, so make sure you fill out the Google form at the end to ensure that you fully participate in this top fan. Okay, so the make sure you join this top fan campaign in order to entitle for exciting prizes by M Plus Online. All right, all right. So without further ado, let me introduce our presenter for today. All right, our partner, Miss Liyana Majid. Hi, Liyana. How are you? Sorry, Liyana, I cannot hear you. It's okay.
Hello,
Yeah.
Faizal.
Hi, how are
I'm
you? We
good.
meet
I'm good.
again.
Thank you very much.
So we met again. Previously we
Yep.
did this session in Bahasa. Now we do in English.
Upgrade English next year. Maybe can do Mandarin.
Hopefully. All right. So just a background for Liana. So Liana is has worked with Macquarie Warrants Malaysia since 2014, and she graduated from Purdue University, United States. Right. Okay. All right. So I don't want to take any more of your time, Liana. So I think I will pass you the floor. All right. And I hope you guys have a good sharing session with Liana.
All right. Thank you so much, Faizal. Okay. So let me just share my screen first. So share my screen. Okay, so boleh nampak kan? Okay, all right. So thank you very much, Faizal and M Plus Online, especially for inviting me for tonight. And as introduced just now by the host, I'm Liyana from Macquarie Malaysia Warrants. So maybe we haven't some of you have not met me before, but maybe some of you guys that are watching today's webinar have already attended my webinar before. Yep. So my specialty is in the structured warrants. So today I'll be speaking about the warrants lah. So generally just be talking about structured warrants and how investors can trade structured warrants in a smart way. Okay. So now, before I start, so I just would like to highlight to investors that this is the presentation material has not been reviewed by the Securities Commission, and this is just purely for educational purposes. Okay, and this is not for it doesn't include any recommendation, and the past performance is not an indicative of future performance lah. All right. So now, just telling everyone about a background of structured warrants. Okay, just a little bit of something about structured warrants. Maybe some of you have not heard anything about structured warrants yet. So first of all, structured warrants is a listed and traded product on Bursa Malaysia. Okay, so it's a listed securities that is issued by the financial institutions lah, and it was made available for trading on Bursa Malaysia in early 2000. Okay. Um, for some investors, warrants may be similar to options, and warrants typically have longer maturities than options, and they are issued over a wider range of assets. Okay, like for example, structured warrants, they are currently listed on Bursa Malaysia. They are listed over several underlying such as single stocks and index. Okay, so single stocks and index can be local and also foreign. Like for example, single stocks, we can issue warrants over single stocks that are listed in Bursa Malaysia, like such warrants over any company that are public listed on Malaysia, like Tenaga or MyEG, for example, Supermax or any other companies. And index, the local index like FBMKSCI, for example. Okay, and also such warrants can also be issued over underlying like exchange traded fund. Okay, so these are currently the underlying that are basically they are currently issued in Malaysia lah. And the foreign one, we have currently we have warrants over names that are listed on Hong Kong Exchange like Alibaba, Meituan, Xiaomi, which I will be explaining in my slides later. Okay, so some people may have wondered, structured warrants, what are exactly structured warrants and what is the purpose of uh, the existence of structured warrants in Malaysia? Okay, so basically the purpose of structured warrants in Malaysia is that it provide exposure to underlying for a fraction of its underlying price. Okay, so meaning that let's say investors they want to trade mother share. Okay, so they want but sometimes mother share can be very, very expensive. So structured warrants is like a penny stocks that can give you a similar exposure to the mother share. Okay, so that's why it says that the purpose of structured warrants is giving investors exposure to the mother share for a fraction of its mother share price or its underlying price. Okay, so like for example, if the mother share is trading around RM5, some investors that only have very limited capital, they can trade as minimum as 100 to trade such warrants over a particular shares that are expensive, and then they can gain the same exposure by only spending little capital. Okay, all right. So the difference between structured warrants and versus other derivative products. Okay, I also would like to mention that structured warrants are derivative product lah. Derivative is actually comes from a root verb derive, right? So meaning that structured warrants is a type of derivative whereby the price of structured warrants derive from something else. So that is why it is called as derivative products. Okay, so the difference between structured warrants and any other derivative products is that structured warrants doesn't have any margin call. And margin call meaning that investors cannot lose more than their initial investment. Okay, so what are other derivative products that are available on Bursa Malaysia at this moment? So other than structured warrants, derivative products that are listed like futures. If some people that know about other financial instruments like derivative products, swaps also can be a derivative product as well lah. But such warrants are futures are tradable on the primary market, on the listing market. Okay, so meaning that structured warrants, the difference between structured warrants as compared to futures is that when you trade structured warrants, what how much you invest. For example, if you trade only using 1,000 capital, so that is the only capital that you will lose. Let's say if you get your view incorrect, okay, so only 1,000, that is the total loss if you lose lah. But if you make money, then that's good. But for futures, for example, if you spend about 1,000 to trade futures, then it will keep asking you to put another money. That is what we call it as margin call. So in at the end of the day, so the total amount of the investment would be more than 1,000 as compared to such warrants. How much you spend, that is how much the total amount that you will potentially lose. Okay. All right. So I just want to give you all an overview about the structured warrants market lah. So now since we have COVID, so we have already categorized our world, our timeline now with starting from pre-pandemic, pandemic, and also endemic, which we are in that phase at this moment. Okay, so pre-pandemic, for example, I want to show to you, okay, what are the type of underlying that are popular, and meaning that they are actively traded by investors. Okay, so pre-pandemic, from 2019 and before that, so index warrants are more popular as compared to single stock warrant. Okay, and then going towards COVID, and we know that at that time, rubber glove stocks, everything, those kind of share price rally. So we can see that investors have switched their trading from index warrants to single stock warrants. So we can see from this pie chart lah. So 2020 and 2021, single stocks warrants are more in focus among investors at that time. And then now when we are entering, when we are already in endemic, okay, so we can see that the pie chart has already changed, whereby index warrants are becoming popular again among investors as compared to index, which is currently in line with the current market at this moment, where the index markets, the all the mother shares, the single stocks doesn't really move that much as compared to the index. Okay, so from this pie chart, what it actually explains to investors is that it shows that structured warrants market are really dynamic. Okay, investors' demand are very sensitive towards the current market situation, and it also means that structured warrant provide investors with a variety of selections to trade on the bursa market, because it gives investors a flexibility to switch trading from different sector or underlying depending on the market condition. Okay. All right. So based on the pie chart, because just now we saw that underlying index are more popular than single stocks. So I also want to highlight what kind of the index that is popularly traded among investors. Okay, so this is from the statistics that we have lah. Okay, so we come up with this pie chart for investors to see. So pre-pandemic, we can see that Hang Seng warrants are in the spotlight. Okay, and the second one is the China A50 warrants. Okay, and switching to during pandemic. Okay, so we can see that the pie chart has become a little bit more what we call it divided lah. But Hang Seng warrants remain as popular underlying, and then after that investors have started trading KSCI warrants, and then we can see that there are a variety of underlying index that investors have started trading. So meaning that we can see that other than the market movement, we can also see that investors have already know about structured warrants, and they have already know that there are, other than Hang Seng Index, there are also variety of underlying index that are available on the bursa market at this moment. But Hang Seng has always been the popular choice since before pandemic up until now. Okay, now moving on to the next slide. Why warrants? Why we are talking about warrants now, and why investors should try to look at structured warrants as part of their financial instruments. Okay, so the main reason why investors usually trade structured warrants is because of the gearing. Gearing is the number one thing that investors like to trade structured warrants, because I mentioned just now, such warrants are penny stocks, right? So penny stocks meaning that the price of the warrants is very, very cheap. It can range from 10 cent or sometimes less than 10 cent, from 10 cent, usually from 20 cent, for example. Okay, so because of the small value of the structured warrants, so when it move only to a very small value, then the percentage movement of the structured warrants can become very big lah. Okay, like for example, like your car, for example, right? So it's like gearing, so that's why it's called like gearing. So for example, if a mother share from 1 cent, for example, we have mother share Dnex, for example. If Dnex is trading at 1 ringgit, for example, and from 1 ringgit, if the mother share goes to 1 ringgit 10 cent, okay, so how much is the percentage change for Dnex from 1 ringgit to 10 cent? How much? Okay, so the percentage gain is 10%, correct? So for example, whereas for structured warrants, if the structured warrants that follow the mother share of Dnex, for example, okay, from 10 cent, okay, because the mother share increased, so the performance of the warrants also increased, right? So from 10 cent, and then it increased to 20 cent, okay? So that 10 cent price increment is when we translate to the percentage gain. So the percentage gain is 100%. So that is the gearing that investors like to see. All right. Another thing is that because investors can use only very less capital to trade such warrants, and so with the excess capital, they can diversify their portfolio. All right. Other than that, structured warrants, we have call and put warrants that track the movement of the underlying in both directions. So, meaning that investors have the ability to take advantage from both market directions, or from the direction of the mother share, lah, whatever type of underlying that they want to trade. Okay. Okay. So, right now, after explaining about structured warrants, so first of all, before investors try to trade or start trading structured warrants, first thing first, investors need to understand the characteristics of this product first. Okay, so this is very, very common advice that all the financial advisor will talk to their clients, or for anyone who wants to put their money into something. Okay, so investors should get a clear view and gain a better understanding of the nature of the warrants, like how it works, how warrants can benefit your trading, and they also should know the risks that are involved when you trade such warrants. So this is also similar with any other investment products. Like for example, if you want to put your money into what unit trust, you want to put your money into fixed deposit, you also need to understand about that kind of products, and only it is advisable for you to put your money into that kind of investment product, right? Okay, so why investors need to understand the characteristics of the product is because to ensure warrants can be the right investment product that matches your investment goals. That's the number one thing that investors have to know, why they have to learn about such warrants. Okay. All right. So now, I've been talking about such warrants, but sometimes we just say we just mentioned warrant lah, because such warrants sometimes people also, it is also commonly say as such warrant. Okay, so actually you don't want to get confused warrant, structured warrants and company warrants. Okay, but there are company warrants in Malaysia as well. So what are the differences between structured warrants and company warrants? So first of all, structured warrants, they are issued by the third party financial entity, like Macquarie, for example. So we are the issuer of the structured warrants. Currently in Malaysia, there are a total of 6 issuers that issue structured warrants. For example, like RHB, Kenanga, Maybank, CIMB, and Macquarie, and what Bank. Okay, so there are a total of 6 issuers that issue such warrants at this moment. Company warrant, they are issued by the underlying company. Like for example, if there are company that's called Hong Seng, okay, so there are company warrants that you can see Hong Seng warrant. So when you see that, meaning that that company issue that warrant lah. So we call it as company warrant. So how you want to know whether that warrants are structured warrants or company warrant? So if you see structured warrants, so this is structured warrant. Okay, structured warrants. It will start with the name first, and then after that it will you can see hyphen. Okay, hyphen, and then after the hyphen you will be able to see a letter C. Or for put warrant, it will start with letter H. So this is called an H. So if you see this on your trading account, okay, on your trading platform, then you will immediately be able to tell that these are structured warrants. Whereas for company warrant, you will see the letter W. Okay, so this is W, means company warrant. Okay, in terms of tenure, structured warrants have a much shorter tenure as compared to company warrant. The tenure for such warrants are minimum is 6 months, and it can go up to 12 months. For company warrants, usually we can see most company warrants have expiry date or tenure lah, we call it minimum 2 years, and we can see it can go as high as 5 years. And something that has expiry, there will be settlement. Okay, for those who trade company warrant, maybe know about the settlement. For company warrant, it will be settled in physical, meaning that once the warrant hit its expiry date, okay, so it will be exercised. In terms of investors who buy that company warrant, they will get in terms of the company shares. Okay, so that's why investors trade the company warrant, because they want to get that company shares. But for structured warrants, okay, right now at this moment, all issue structured warrants that are cash settled, meaning that if you buy structured warrants and if you keep the structured warrants until the warrant expires, then you will get the warrants in terms of cash. Cash meaning that there is a formula for that, like how we want to determine how much investors will get at the end of the day when the warrant expires, which I will explain to you in my later presentation. All right. I already explained about how our warrants name. So first of all, it will start with the underlying name. Okay, so whatever it is, it will be identified by its last name lah. Okay, by its company name. For example, if you have hibiscus, for example, and then you will be able to see the name of the company. And then after that, you will see the type of the warrant. Okay, I'm not sure why this label is a bit off. Okay, maybe because of the different laptop. Okay, so now you can see it will start with C, and after that it can start with any series. Okay, it can start from A to Z. So you can and it can be numbers from 1 to 99. So how we name it, this is determined by Bursa. The issuer only provide our the issuer, we inform the regulators that we want to issue warrant, for example, and then after that, Bursa will decide on the naming of this warrant lah, to label each of the warrants. Okay, so call warrants. The characteristics of call warrant is that it moves in a similar direction as mother share, meaning that when the mother share goes up, call warrant will also go up. When the mother share goes down, then call warrant will also goes down. So it tracks exactly the movement of the mother share. So call warrants, because of this, it is suitable for bullish investors lah, meaning that investors who have an optimistic view on the particular underlying index or mother share, for example. Okay. All right. So this is the movement, the chart that shows the movement of the core warrants that track the movement of the mother share. Okay, so the blue chart is the mother share, and the orange chart is the warrants. Okay, so you can see here when it follow exactly the movement of its mother share. So this tells you that this is called warrants. And for put warrants, okay, so the naming is like this. As usual, we'll start with the name of the mother share of the underlying index, and then after that it will start with the letter H. Okay, do not want to be confused with P. P is already given to the preference share, so that's why H is given for put warrant lah. Okay, and then after that I will start with series of alphabet or any number. Okay, for put warrant, the characteristic of it is that it moves in an opposite direction from its underlying, meaning that when the mother share goes down, okay, the warrant price will go up. If the mother share or underlying index goes down, okay, it goes up. If the mother shares or underlying index goes down, if it goes up, and then the warrior will go down, so it move in an opposite direction. Okay, you can see from here, like for example this one. So why there is put warrants is actually is suitable for investors who want to make profit when the market is not performing. Okay, like for example, if Hang Seng Index, for example, if it falls, then investors who think that they can make profit when the market is down, then they buy put warrant. Okay, because they can make money when the market is in trading in negative territory. All right. What else that investors should know about such warrants? Okay, uh, because there are actually more than 100 warrants. Okay, I think in fact now in Bursa Malaysia we have almost 1,000 of such warrants that are available on Bursa Malaysia. And for example, if one particular single stocks, there are in fact like more than 10 warrants, so investors do not know which one to choose. Okay, so that is why investors, every such warrants have different characteristics because it has the exercise price. Okay, so you have to know that such warrants have an exercise price, and this exercise price that determines the characteristics of the structure warrants. Okay, so exercise price, it can make warrants to be in the money, at the money, or out of the money. Okay, so I don't want to explain this because I don't want investors to get confused, like all of you to get confused right now. You guys don't really have to memorize this, but actually, we have a website that we can show to investors how you want to know whether the warrants are in the money, out of the money, or at the money. Okay, like for example, I'm sharing you my screen. I'm showing this is Malaysia Warrants website. Okay, and then you can go to malaysiawarrants.com.my. Okay, I've already prepared my screen here, and then you can just go to this warrant search. So this website has so many tools. I just want to show you one of the tools that are that is very useful, which I also use it every day. Okay, and then I want to show you the warrant search, where it can show you how you want to check whether the warrant is at the money, or in the money, or out of the money. Okay, like for example, we select any of the warrant. What kind of, okay, so like for example, I want to show you all Alibaba. Okay, Alibaba, for example. Okay, so here on this page, okay, there's a function all moneyness, the drop down box all moneyness. Then you all can select at the money, in the money, or the money. Okay, so let's say if you all want to trade warrants that are in the money, then you can just click here. Okay, and then you'll be able to see the type the kind of moneyness of the warrants for call warrant and put warrant lah, for example. Okay, so you can see, okay, so at this moment for warrants issued by Macquarie for Alibaba warrant, we have two warrants, one for call warrant and one put warrant that are currently in the money. Again, you can see that the price is trading at 24 cent, 13 cent. Okay, for example, if you all want to trade warrants that are out of the money, for example, okay, you can just filter. Okay, currently it doesn't have any warrants that are out of the money. Okay, if we go with Hang Seng Index, okay, this is a popular warrants like investors like to trade this warrant. Okay, so just change the underlying name Hang Seng Index and then you select out of the money. You can see a lot. There's a list of warrants of Hang Seng that are currently out of the money. You can see at this moment right now. Let's say if I want to filter only call warrant, okay, because I want to buy call warrant and I want to buy out of the money warrant, for example. So you can see at this moment, all call warrants that are out of the money are making profit at this moment. Okay. For example, if you want to say put warrant that are out of the money, for example, you can see that currently they are down lah. Okay, so why this is down is because of today futures are up, right? The market is up, so that's why put warrant is doesn't make profit lah. But for call warrant is currently making profit because of the because it tracks the movement of the futures of the market, and that's why it's currently up. Okay, now going back to my slide. Sorry, I have to run it a little bit fast because I scared I'm running out of time. We have 20 more minutes. Okay, so now other than exercise price, we also structured warrants also have an expiry date. As I mentioned just now, every structured warrants have a tenor. So tenor means that warrants should have an expiry date. Okay, so when it has an expiry date, it gives you a hint that such warrants are actually not suitable for long-term investment. Okay, a lot of investors always ask us about structured warrants. Let's say if they buy the warrants and then they hold the warrants until the warrant expire, what should they do? Okay, actually they shouldn't do anything. If you buy warrants and you hold it until the warrant expires, you do not need to do anything because the structured warrants are automatically settled on the expiry date. Okay, automatically exercise. Automatically exercise, meaning that not like company warrants. When your warrant reaches the expiry date, you have to fill out the form and then submit to registrar, and then only you will get something from the registrar, like Mothershare, for example. But for structured warrants, okay, there's no form for you to fill up and to give to the issuer. Okay, the issuer will immediately calculate for you how much you will get when your warrant expires, whether you will get something or you will not get anything. Okay. So when warrant expire, okay, because the exercise price just now, so warrants will expire either in the money or out of the money. In the money meaning that warrants will expire with value lah, and then you will get back something at the end of the day. If the warrant expire out of the money, you will not get anything because the warrants expire without any value. So these are the tips that investors should remember. Okay. Other than that, the effective gearing, just now I've already mentioned to you. Effective gearing, it has the gearing lah. Every such a warrants that have an exercise price, and so it also determines the gearing of the warrants. Okay, higher effective gearing, warrants that have higher effective gearing, it will give you bigger movement in warrant. So meaning that when it gives you bigger movement, it will give you a higher profit potential, but at the same time it also give you a higher level of risk should your investment view goes wrong. Okay, like for example, if you buy such warrants because you think that in the future you will get some returns because the mother share that the warrant that tracks the mother share will make profit. Okay, but suddenly it doesn't go according to your view. Okay, then warrants that have a higher effective gearing will potentially give you a higher loss as well. So that's why we call it as higher level of risk. Okay. So the tips about effective gearing is that for warrants that are out of the money, okay, out of the money, you can look at the warrant search on Malaysia Warrant website. Warrants out of the money that are nearing expiry, it will give you a higher effective gearing. So for investors that can absorb the higher level of risk for the warrants, then they tend to trade warrants that are out of the money and also warrants that are going to expire. Okay. And at the end of the day, when you trade any investment product, including such warrants, you have to know what kind of risk profile. What is your risk profile? What is your risk trading profile? Whether you are a high risk taker, you're just moderate, or whether you are just like a low risk taker. Okay, so you need to know that. That is very, very important when you trade any investment product or any financial instrument. All right, and how you want to compare effective gearing? I'm still showing you the same tool on the website, which is the warrant search. Okay, so here's the function of the warrant search. You can just filter here, okay, effective gearing, and then you can just compare lah. Like for example, if you are just very low risk taker, then you can choose structured warrants that have effective gearing that is less than 5 times, for example. Okay, and if you are just like a moderate investors, so you can just try to trade warrants that have effective gearing from 5 to 10, for example. Or if you can stomach that high risk, okay, then you can go ahead with such warrants that have a much higher effective gearing, but you can filter here. Okay, so if I want to show you the website again, here, okay, for example, if you go with Hansing Index, if you want to see warrants that have a higher effective gearing, then you can just filter here, and then we have already filtered out for you. Okay, so you can see here warrants that have a high effective gearing are actually going to its expiry lah. Okay, you can see here warrants that are going to expire end of the month. So 10 to 15 times effective gearing, for example. So you can see these are still a good warrant to trade lah. Okay, so you need to know what is your risk trading profile. Then you can select based on effective gearing that are suitable for you to trade. Okay, moving to another slide. Okay, so I've already showed you the warrant search page. So this is very, very important for you. Okay, so I hope that after this and the webinar, you all can try to play around with this website, and then go ahead and try to use our warrant search tool to see all the structured warrants that are listed on Bursa Malaysia. Okay, now moving on to the next chapter of the webinar, which I want to explain to you how to select a warrant. So just remember 4 things, okay? 4 simple steps on how you want to choose such a warrants. Number 1, okay, you need to take a view on the underlying markets, or you need to take a view on the mother share, for example, okay? So let's say if you are bullish, you think that the market will go up again, okay, in the future, then you will decide, you may want to choose call warrant, okay, because of the characteristic that it tracks exactly the movement of the mother share, right, or is underlying. Whereas if you are bearish, then you can go ahead and trade put warrant. Okay, so once you have already decided whether you want call warrant or you want put warrant, and the second thing that you have to know is that you need to set your trading time frame. So this is very, very normal, very, very standard when you trade anything. Okay, so you need to know whether you want to trade it within 1 week, you want to trade it within for 2 weeks, or you want to trade for a longer period, for example 1 month or 2 months or 3 months. So it's all up to you. So once you have already set your trading time frame, then you need to select warrants that have a suitable expiry date for you lah. So as a rule of thumb, usually I like to tell investors, if you want to trade intraday meaning that you buy in the morning and then you sell back before market close, then you can trade warrants that are more sensitive lah, because more sensitive warrants, you can already make profit within one day. But some people that are busy, that their trading is not like it's just a full part-time trading. Okay, so for those kind of investors, they may want to choose warrants that at least have an expiry date like 3 months from today, or 3 months from the day that they buy. For example, if today they buy the warrants, and then they need to know that it's already August. Okay, August, so the expiry date must have at least like 3 months from today, so the expiry date must be November. So that is safer for investors lah, because if they trade structured warrants that have a longer tenure, then it gives you an ample time to think and to decide what kind of strategies that you want to do lah. Okay. The third thing is effective gearing. Okay, like I've already mentioned, why I always emphasize about gearing, because this is number one thing, the main thing that investors trade structured warrants. So whatever it is, when you trade structured warrants, you need to find the right balance of risk and return. And the last thing is that you need to know the liquidity of the structured warrants. Okay, so liquidity actually determines how easy for you to enter. Okay, once you enter, you need to know, you need to be able to sell back the warrants quickly as well. So that means that it means by liquidity. Okay, you don't want to buy something, when you want to sell back, it's very hard for you to sell back because nobody wants to buy something that you want to sell. So liquidity is also something that is very important lah. Okay. Now, I still want to talk about liquidity, okay? Because this is something that is a type of common misconception among investors when they trade such warrants, okay? So because for example, yeah, I have this call warrant. I have two call warrants. I have call warrant X and call warrant Y lah, okay? So, uh, volume traded versus liquidity, which one is more liquid? Okay, so now let's look at call warrant X. Okay, so now when you see call warrant X, first of all, you need to see bid volume. Okay, and then you need to look at ask volume. Okay, so bid volume for call warrant X is 2 million. Ask volume is 1.5 million. That is a lot actually for warrants. Okay, all right. For call warrant Y, you, for example, the volume is only 100k, ask volume is also less than 200k, but the traded volume is 13 million. This is possible. This is something that you can see every day. Okay, so even though you see the trading volume is over 1 million or 13 million like this, it doesn't mean that this is a good warrant, it's a liquid warrant, because you can see here that the ask volume and the bid volume is very, very small. Okay, for example, if you bought a warrant for 1 million unit, for example, okay, and then if you, let's say the warrant has already hit your target price, and then you want to sell back all 1 million because you're scared that later the price will drop again and then you won't be able to sell back the warrant. So let's say you queue about 1 million, okay, and then you hope that your 1 million volume, okay, quantity that you have already queued, hoping that someone will get it immediately. Will you get to sell your warrants 1 million immediately for call warrant Y? The answer is no, right? Because this is not liquid. Okay, so if you queue 1 million, so probably it will only get matched for 100k because there's only very little volume bid on the bid. Or for example, if you want to buy call warrant Y because you think that, oh, this is very popular because everyone is trading. So let's say you key in 200, but people only willing to sell to you 100k. So at the end of the day, you only get a partial of the actual quantity that you want to buy. So that is not good. Okay, so as compared to call warrant X, if, okay, for example, you see trading volume is 500k, so you think that this is not a good warrant. Okay, so you think that, okay, nobody's trading this warrant, so it's not a good warrant, but you need to look at the volume on the bid side and ask price. Okay, so if you want to queue for 1 million, for example, it will get matched immediately, and if you want to sell back the warrant at 1 million, it will also get matched immediately. So meaning that this warrant is more liquid as compared to Warren Y. Okay, so now I just want to clear lah the misconception among investors that trade structured warrants. So structured warrants are slightly different as compared to the money share, is because you do not want to look at the trading volume, because sometimes trading volume can be misconstrued among investors because they think that trading volume is very less, so meaning that the warrant is not good to trade. So what you need to do is that when you want to compare liquidity, which one is better for you to buy, because you can get it, you can enter and exit from your trade very easily, is by looking at the bid and ask volume. And number two, you need to look at the bid and ask spread. Okay, so this is good lah, because the bid and ask spread is very tight. So the bid price is 13 cent and the ask price is 13.5 cent. But for example, this warrant, call warrant Y, the bid price is 12.5 cent, and you can see the ask price is very is slightly above from one tick lah. So the spread is quite, it's a little bit huge. Okay, it's not a tight spread, so meaning that this is not a good warrant. So this is how you want to compare. Okay, I'm not sure whether I want to explain to you about this. I think we have another session or webinar in August as well, so maybe you can gain some insight from the next webinar maybe. Okay, so I just want to tell you about the expiry date. Okay, so when the warrant has an expiry date, okay, so when it expires, so this is another thing that you have to remember, other than the expiry date, which is the last trading day. So the last trading day is the last day for investors that are allowed to buy or sell specific warrant. Okay, for example, if you see such warrants will expire on 30th August. Okay, and let's say if you want to sell back your warrant, please don't wait until the last day on 30th August to sell back your warrants, because there is some there 2 days one day before the warrant expire, it will be suspended. So meaning that you have to know that there is a last trading day of the structured warrants which falls on the second market day prior to the expiry date. For example, you can see here on the calendar, okay, when the warrant has an expiry date of 30th August, for example, so the last day of trading for that warrant is on 28th August. So if you wait until on 29th August, so let's say if you want to cut loss your position, for example, and then you want to sell back, but then it's already you cannot do anything because it has already been suspended. So what you have to remember is that last trading day of the warrant, which falls on the second day, on the second market day prior to the expiry date. Okay. And some of you might want to know about the expiry formula. So these are the formula for call warrants and put warrants. Okay, so call warrants, the formula how you calculate when the warrant expire is that we use the settlement price. So the settlement price, for example, for the money share, we take the 5 days average price of the money share for 5 days before the warrant expire. Okay, and then we calculate the average of that 5 days. That is considered as a settlement. Okay, settlement price, we minus the exercise price and then we divide it by the excess ratio. So this is how we calculate for call warrants lah. Okay, for put warrant is terbalik lah, terbalik. Okay, same as the movement of the put warrant is also terbalik, right? So the calculation for the expiry for put warrant is also terbalik. So terbalik means that exercise price minus settlement price divided by the excess ratio. Okay. For foreign warrant, okay, for example, warrants over foreign underlying. So this we use the same calculation, the same formula as well, but then we have to convert this value that we get, okay, using this formula, the value that we get, we convert it to Malaysian ringgit using applicable FX rate at expiry. For example, if the warrant is Alibaba warrant, for example, so you have to know how much is the FX rate from Hong Kong dollar to Malaysian ringgit. So we multiply, we take this value and then we multiply by 0.5, for example. Or if that warrant is over US underlying, for example, so we get the value and then we multiply by the FX rate, which is USD MYR 4 ringgit something. Okay, so that's how we get the value. All right, I think this is like the second slide of the presentation. So far so good, right? Okay, I just want to show to you all that currently for Macquarie, because you always ensure that investors will have a wider selection in trading structured warrants, so we currently have a broader coverage, I would say. We have warrants over underlying that is listed locally in Malaysia and also overseas lah. So for local, we have the KSI index. For overseas, we have Hang Seng Index, Hang Seng Tech Index, iShares China 50, and also S&P 500 Index. And we also have our new product offering, which were listed in December 2021 because we want to increase, we want to widen our coverage in the US markets. So we have new warrants over Dow Jones Index and also Nasdaq Index. Okay, so This Dow Jones Index tracks the 30 largest companies in the US, and Nasdaq, you all know lah, the technology stocks, right? Okay. So the Bursa code is 0658. This is the code, the trading code for the warrants lah, and also the trading code for Nasdaq is 0659. So for those who have the trading platform, maybe you can just try to type 0658 or 0659 to see a list of structured warrants over this particular indices. Okay, like for example, Dow Jones warrants. Currently, we have about five warrants. We have two call warrants over Dow Jones, and we have three call warrants over three put warrants over Dow Jones lah. And for Nasdaq, we also have about three pairs at this moment. So this is the good thing about trading index warrants lah, because you see that now market is currently bearish, right? So year to date for both Dow Jones and Nasdaq are also like this, okay, negative. Both of them are negative. So for some people, they think that market is doing very bad, so they don't want to trade. But so here's why we have structured warrants, because we have call warrant and put warrant, especially put warrant. So for those investors who trade put warrants during this time of market condition that is not performing very well, so investors tend to make money because of the characteristic of the put warrant that move in an opposite direction of the underlying. Okay. All right. Another reason why investors should may want to consider index warrants because of the diversification. Okay, we all know that index warrants have a variety of stocks inside. In one index lah, okay, so you may get the exposure to an entire economy or sector, but like Nasdaq for example, or S&P 500 for example, okay. And then the good thing about trading index warrants that are listed on Bursa Malaysia is that you get the same exposure of the US markets, for example, but without having to open the US trading account. You can just use your existing trading account that you have right now. For example, if you have M Plus trading account, you can just use your M Plus trading account, and then you can trade warrants over US markets or Hang Seng market, Hong Kong markets, for example. Okay, so this is the good thing about trading index warrants, and it also explains why index warrants are popular, as what I showed in my previous slides from that pie charts, right? Okay. And also it gives you two directions. Okay, it gives you an exposure in both market direction, whether you are bullish or bearish. So you can just trade index warrants. So that is why lah. Okay. Another thing to highlight is that on our website, okay, on our homepage, we currently shows the live index features for Hang Seng Index and Hang Seng Tech Index. I know that some of investors who trade Hang Seng Index warrants, they like to refer to other external website as well. That's also fine, okay. But for those who don't know which website to view the live index features, you can view on our website. On the homepage itself, we show these live prices of the particular indexes. We also have warrants over Hong Kong stocks. Okay, do not think that we have a very limited warrants. We have a lot. We have Alibaba, we have Meituan, we have the ATMX, the popular ATMX Hong Kong stocks. We also have a variety of Hong Kong stocks warrant at this moment, where you can find out on our website as well. Okay. And you have to know when you trade warrants of a variety of underlying when on local or overseas, you have to know the market making hour, because our warrant price tracks the movement of the mother share or the underlying index. So the price of our warrants will also follow the market making hour in their respective trading exchange. Okay, so like for example, warrants over KCI, then our price of our warrants KSI and Malaysian shares based on the Bursa Malaysia trading hour lah, from 9 to 12, 29 p.m. 2:30 to 4:43 p.m. before auction. Okay, so for US indices, it covers the entire trading hour of Bursa Malaysia, which is a good thing because all our US index warrants track the futures of their respective futures. Okay, so the respective futures of the US indices, they trade 23 hours, which also covers the entire trading hour of Bursa Malaysia. So this is also an advantage of you if you trade US indices lah. Okay, US indices warrants. For Hang Seng and Hang Seng Index, and also Hong Kong stocks warrant and China A50. So the market making hour are a bit shorter as compared to Bursa Malaysia. So you also have to know. Okay, so these are the trading session lah for Hang Seng and Hang Seng Tech Index. The morning session is from 9:15 to 12 p.m. Okay, but we pull our prices 2 minutes before the market close. Okay, in the afternoon session it starts from 2:30 until 4:28. Okay, for Hong Kong shares, okay, for the single stocks, they are listed on the Hong Kong exchange. So you have to remember that their trading hour is even lesser, even shorter than Hang Seng and Hang Seng Tech Index. So you can see the morning session is similar, but the market making hour in the afternoon session is slightly shorter, which is from 2:30 p.m. to 4 p.m. only. But we always put our prices 2 minutes before, so that's why you can see here on this table the afternoon session from 2:30 until 3:58 p.m. Okay, this is about the life metrics. I just want to show you the importance of the life metrics. Life metrics meaning that it's like a table of a price of a warrant that shows you for a particular warrant throughout the day. Okay, like for example, you want to know, let's say if you want to buy, let's say like for example, if you buy a warrant at 3 cent, okay, and then you have a target price of your warrant. Let's say you buy a warrant at 3 cent and then you want to sell back at 5 cent. So how much of the mother share should go up in order for your warrant to reach at 5 cent? Okay, so the price table, which is called as live metric, so you can see here, okay, at this column warrant bid, because when you want to sell back, okay, so you need to look at the warrant bid price lah, because it will get matched immediately. You put at offer and then someone will take, our market maker will take a warrant bid price. So 5 cent, so the mother share will go up at this range. Okay, so you sell back at 5 cent. Okay, so you will be able to know how, at what price of the mother share will go up, will move in order for your warrant to hit your target price, for example. So similar to put warrant. Okay, put warrant, it's the same thing. You buy at certain price and then you have to have your target price. So you want to know when you buy your warrant at 9 cent, for example, and then your target price is 10.5 cent, for example. So you'll be able to see, okay, because this is put warrant, so how you want to view is a little bit opposite as well lah. Okay, so in order for your warrant to hit the target price, so the index should go down. Okay, should go down, then you will be able to see the index should trade at this level in order for your warrant to hit your target price. Then you can sell. So this is how you see the live metrics. Okay, so currently our live metrics is also a powerful tool that we offer on our website. It's completely free. You can view our warrants, up to 9 warrants on the same page. You can look around on our website just to see how you can use the live metrics lah. So from here, I'm just showing you my live metrics, the live metrics on Malaysia Warrants website. Okay, internet is a little bit slow on my end at this moment. I'm so sorry. Okay, so here is the live metrics. You can see here, you can select a lot of online that we have currently. Okay, so whether you want to go to Nasdaq, for example, okay, so you just click on Nasdaq, and then for example, if you want to buy Nasdaq's call warrant lah, then you'll be able to see. So you can also see the terms of the structured warrants. If you want to know what's the exercise price, what's the current price, so you're able to see, and then you can compare. Okay, on one page, on one single page, you will be able up to 9 warrants. So let's say if you want to buy more than one warrant, then you'll be able just to see every warrants table on a single page, which is very, very convenient. Okay, so you don't need to pay, you don't need to open a lot of pages lah. All right, I think I'm almost done. Let me just this is my last slide. So I just want to highlight to investors who trade warrants that are issued by Macquarie. If you want to know the fastest news or latest updates from us. Like for example, if you trade such a warrants, you want to know whether the warrants already sold out, or you want to know about the corporate action. Like for example, if the mother share give you dividends, bonus, or rights issues. For example, you want to know why suddenly my warrant price has already changed. Okay, so we have a Telegram channel that updates everything. Okay, I'm pretty sure everyone is very familiar with Telegram channel. A lot of people are using Telegram channel to join to get the latest updates. So we also have a Telegram channel which is called as Mukori Warrants Malaysia. Okay, we put a lot of information here. For example, like whenever we have a new listing of a new warrants, if you have a Mokori research report that gives us a summary of a Malaysia economy, so a lot of opinion from our research, then we also put this on our website. Okay, we summarize that. There's a lot of things lah where if I mean tak rugi lah. Okay, if you follow our Telegram channel, it's completely free. Okay, so yeah, I think that's all. If there's any question, maybe Faisal, I think I just pass it back to you. Faisal, are you on mute?
Oh, sorry, Lena. Can you hear me?
Yes, I can.
All right. What an interesting sharing today. I'm just said that I saw that you need to speed up your presentation earlier because you ran out of time. All right.
Yeah.
So hope you guys, everyone, find it helpful in your this sharing in your trading journey. All right. I think before we go to Q&A, I just recap for those who are interested to participate in the top fan campaign. Make sure that you screenshot your comment alongside the webinar. And then don't forget to fill out the Google form attached in the comment section. All right. All right. Okay. So we go to the question. We got a few questions here, Lena. All right. The first question is, all right, why some warrant is not follow the life matrix?
Okay, all right. Some warrants that do not follow the life matrix, okay, because in my chart, in my previous slide, I show you that now warrants should follow the movement of the mother share lah, kan?
Yeah.
Or put warrant will move in reverse. So
Yes.
why some warrants it doesn't follow it, like the characteristics is not, it doesn't, it's not behave like it should be, okay? So there are a few
Mhm.
reasons why it doesn't behave as it should be. It's just because number one, the warrant may be sold out. Number
Mhm.
two, the warrant is the delta, okay, the delta or what we call it as, because the warrant has a moneyness, okay, so the delta of the warrant, okay, it is already very too low or too high, meaning that the warrant is very deep in the money or the warrant is very far out of the money. So what determines the warrant very far of the money or deep in the money is that because of the movement of the mother share. Okay, like for example, if Hansing, for example, if it's trade at 21,000, okay, if the warrant exercise price is 15,000 as compared to the mother share that is trading at 21,000 is very far. So that
Yeah.
warrant, when it's very far, okay, assume this is a call warrant lah, okay.
Mhm.
So when the call warrant, it is very far, so it will become very far out the money. So when it is far
I
out the money,
see.
so so it's not a good warrant to trade anymore. Okay. So sometimes because of that, why it doesn't follow the movement of the matrix, because it's not a good warrant anymore. For example, if the
I
warrant
see.
um becomes too deep in the money. Deep in the money meaning that the exercise, the mother share from 50, okay, you remember the exercise price of the warrant is 15,000. So now the
Mhm.
mother share, the Hang Seng futures drop to well below the exercise price. From 21,000, for example, it drops to 10,000 points, for example. Okay. So the
Mhm.
constant exercise price, now the market has already gone down, for example. So it has become very deep in the money. Okay.
I see.
Sorry. I think terbalik kot, terbalik. So basically the call warrant, so the deep in the money and the out of the money warrants, okay. So it doesn't follow the behavior of the characteristic anymore. So that's why it doesn't follow the movement of the you can see that the life matrix doesn't really follow, okay. And sold out it's because something that we issue, for example, if you have about 10 million units, for example, and investors have already bought all 10 millions that we sold, okay? So we don't have anything to sell to investors. So now investors who have already bought all 10 millions, they still have those warrants. So when they still have those warrants, they are now the one who conquer the warrant, so they can just manipulate the price, or sometimes when the warrant is sold out, so it can become inflated meaning that, for example, if the fair price of the warrant should be 20 cent, so investors who have the warrant, of course they want to sell it back at a much higher price from the fair price. So
Yeah.
that's why it doesn't follow the movement of the matrix, because so basically when the warrant is sold out, you can see that the warrant best bid and offer is completely different from the live matrix, right?
Mhm.
Because the prices that you see, best bid and best offer, those are not the price from the market maker. So those warrant price
I
come from
see.
investors who speculate the warrants, and sometimes the warrants price are inflated because of the high supply and demand from investors who have already have that holding from the warrant.
The
So
holding, yeah, correct.
yeah, so that's one of the reasons why the warrant doesn't behave accordingly, and it doesn't follow the life metrics already,
Right.
because prices are controlled and inflated by investors.
All right. Thank you for that very thorough explanation, Lena. Okay, so we got the second question here. Does implied volatility affected on selecting warrant?
Yes, implied volatility is actually a part of criteria, okay, in
Mhm.
pricing up the warrants lah. For example, okay, I don't highlight this lah because it's something very technical. So I would say the investors who ask this question may have an experience in trading such warrants, so that's why they know about implied volatilities. Why I don't explain about implied volatility, because this is just a basic webinar, okay, so I don't want to go into deeper. But since we have someone who asked this question, so it's actually a very good question. So yes, implied volatility effect on selecting warrants, okay. Like for example, okay, I want to show you the website that shows the, let me just explain this lah. I can take some time, right? I mean, we have
Yeah,
already
sure, sure.
exceeded our time, okay. So I just want to explain to you all about implied volatility. Like just assume if you have two warrants, okay, if you have two warrants that have everything similar, exercise price is similar, expiry date similar, type of the warrant which is called warrant is also similar, everything is similar, but what's differentiate between the differentiate between these two warrants are the impact volatility, okay.
I see.
So if you are investors who want to select between warrant A and warrant B, which warrant that you want to buy, so you need to buy warrants that have a lower impact volatility, okay, because actually impact volatility means that the warrants are cheaper, okay. So if you want to talk about the relative expensiveness of a warrant, so it actually relates to the impact volatility. Warrants that have everything is constant, everything is similar, but except the impact volatility, okay. So warrants that have a lower impact volatility, meaning that the warrant is much cheaper as compared to another warrant that has a higher impact volatility. So the reason why you want to look at the impact volatility is because um you want to buy warrants that is cheap, okay. If everything is
Correct.
the same, if both warrants have same thing, okay, so warrants has a similar price 10 cent, but then the impact volatility is lower, but another warrant have warrant price that is 10 cent also, but you look at the impact volatility is higher,
Yeah.
so which one that you want to pick, so you pick the warrant that has a lower impact
No.
volatility, meaning that that warrant is much cheaper as compared to the
Mhm.
warrants that have a higher impact volatility. So basically, impact volatility explains you measures the relative expensiveness of a warrant.
I see. All right. I think
Yeah, this is quite a high technical. So for someone who
yeah,
asked this question is actually someone who has been trading structured warrants for a long time lah. So that's why they ask this
I
kind of
see.
question. But I hope I don't really confuse investors, other
Yeah.
audience that much. For that person who wants for me to explain more about structured warrants, about the impact volatility, they can call us directly.
Okay, sure. Thank you for that information. I think you what you answered just now, I think is quite in layman terms as well. So it's quite easy to understand lah. I think for me lah. All right. Okay. I think we got one last question lah. All right, before we close out the webinar. All right. Last question: how to calculate the warrant price versus the mother's price without referring to the table?
How to calculate the warrant price versus mother price without referring to the table? To be honest, I would say that actually there's a formula to that. But why the reason why we provide the life metrics or the table price is to make your life easier.
Mm,
Okay, is to make your life easier. So you just refer to the life metrics. There's a formula to that lah. Yeah, it's like a long lecture. If I want to tell you, there's a formula to
yeah,
that as well. But it's easier for you to refer to the life metric directly because everything is already computed and calculated, and that's why we come up with that table.
I see. Understood.
Yeah,
So because it involve, I assume it involve a much more technicality, right?
correct.
Without the live table, yeah, I think the live table itself makes it easier for investor lah. All right.
Yeah.
So I think you have a future webinar, is it?
Yes,
Plan?
we will have another webinar which will be conducted by the guest speaker is my colleague as well from Macquarie. Kam Ki Chung will be the guest speaker for the webinar on 25th August, if I'm not mistaken. It will be on Thursday as well, same time, 7 p.m. um, he will explain something more technical. Okay, so that's why
I
we
see.
have this first webinar to explain to you about something general about structured warrants, and that webinar on the 25th it will be more focused on the more technical analysis side lah. So to those investors
Mm,
who have already understand about these basic terms, you can go to the technical. So today's webinar is more on the fundamental. The second webinar on 25th August will be more on technical. My colleague will be showing to you like a chart pattern on how you want to um, apply that chart pattern and incorporate that into your trading, such as warrants trading.
I see. All right. So everyone, those who are interested to join the follow-up webinar of structured warrant, jot down in your calendar 25th of August. I think it's same day, Thursday, 7 p.m. All right. I think that's all from us, Liana. Thank you so much for joining us today. It's
Thank you
good
so
to see
much.
you.
Yep, yep. Likewise, thank you so much for inviting me, and thank you everyone for taking your time watching this webinar. I hope it will be very, very useful. And I'm so sorry if I have to rush a few things. But
Yeah.
if you guys have any further questions, just feel free to call Macquarie. Okay, you can. Call us at our hotline, okay? But you already have our website. I've already shown our website, malaysiawarrants.com.my. You can just go to that website, and there's a lot of information. There's also we provide our hotline number. You can just simply call us. We will be more than happy to assist you and to explain to you more questions related to structured warrants.
Mhm. All right. Thank you so much again, Liana, for your time. Hope to see you again. All right. For everyone, for everyone out there, I think thank you so much for spending your time to watch our webinar today. And for those who don't have any CDS account yet, just go to our website at personline.com.my and click open an account. All right. So I think thank you so much, everyone, for joining us. I think that's all for today. So good evening and good night.
Thank you. Good night. Bye.
Thank you, Nana. Bye.